Could 2024 be the year for gold? Analysts anticipate a move to loose monetary policy might begin next year, which means gold could make a significant move upward. Economic uncertainty means you have to keep up with what's happening. Make sure you subscribe and we'll keep you in the know. Minutes from the most recent Federal Reserve policy meeting reveal Fed officials remain concerned about inflation and that additional interest rate hikes could be coming. Even so, the prevailing consensus among analysts is that next year we will see the return of rate cuts. Last week, Goldman Sachs projected that even if the economy does not fall into a recession, the Fed may start cutting rates in the second quarter of 2024 on the basis of a desire to normalize the Fed funds rate from a restrictive level. Wells Fargo and Bank of America also expect to see rate cuts begin in the second quarter of next year. JP Morgan is still another of the world's major banks that say rate cuts could begin in the second quarter of 2024. And Morgan analysts go a step further, projecting that the expected pivot to accommodative monetary policy in 2024 could trigger a surge in the price of gold. As expectations grow that monetary policy will favor gold next year, robust forecasts of gold's anticipated performance through 2024 are growing as well. Some analysts, such as Bart Melek, think the run-up to gold achieving prices never reached previously could begin as soon as later this year. I do see gold move above $2,100 in late 2023, early 2024 as a trading level. Melek said recently, "I am positive on gold, as I believe that the Fed will tilt policy away from its current restrictive mode. This, I believe, will happen before the 2% inflation target is reached." It's important to note that the TD Securities analyst is saying that he anticipates a return to an easy money stance by the Federal Reserve before inflation returns to its 2% target level. David Neuhauser, founder of Livermore Partners, an institutional asset manager, also expects higher inflation to remain a feature of the economic landscape. Neuhauser is projecting that a shift to a dovish policy amid persistent inflation could lift gold well above current price levels by the end of next year. Some analysts see additional factors besides monetary policy and inflation that could have a positive effect on the price of gold next year. According to strategists at Singapore multinational United Overseas Bank, consistently strong gold buying activity by the world's central banks could serve as a driver of metals prices as well. Last year, annual demand for gold among central banks reached its highest level on record. This year, through the first 6 months, central banks accumulated more gold than in any preceding first half going back to 2000. And according to the 2023 World Gold Council Central Bank Gold Reserve Survey, 70% of central banks said they expect global gold reserves to rise over the next 12 months. We can't be certain that central bank gold purchases will stay at record levels any more than we can be certain that economists' projections actually will pan out. But the possibility that gold demand among central banks remains at least solid suggests it could continue to have a positive effect on gold over time. Bottom line, gold's outlook is prompting analysts to consider we might see significantly higher gold prices next year. That's why I suggest you take the time to learn more about what's really going on in the economy by attending our exclusive one-on-one web conference at augustapreciousmetals.com/webconference.